În continuare, vă invit să urmăriți o prezentare realizată de John Gollifer. Așa cum vă spuneam mai devreme, el a fost directorul general al Asociației Corespondente din Marea Britanie. A ocupat această funcție din 2012 până în acest an. Înainte de această funcție a fost timp de 11 ani, a lucrat la Singapore Exchange, unde a fost responsabil cu relațiile cu investitorii și ca rol în Singapore a avut și înființarea Asociației pentru Relații cu Investitorii. John, welcome to Romania.
Thank you very much, Daniela. So, good morning, everybody, not least the distinguished guests. It's always a pleasure to visit other markets, and I don't think I could be more at home than in a stock exchange. I did hear Daniela mention that I worked at the Singapore Exchange, and to get this level of support at the heart of your capital markets, the stock exchange, is exactly what I think any IR association would like. So it's an absolute pleasure to be here. I think we should also not just thank you, but also the founding members, and not least of all, of course, Daniela, because without somebody, as I heard in the earlier speeches, driving such initiatives, we wouldn't have events like this. And I'm sure when I visit Romania for only the second time in 2019 in the future, we will have at least this level of support, and that's really important. So I applaud all of you for making the effort. I thought what would be helpful, having spoken to Daniela, was if I, in the next half an hour or so, try and address some areas. I'm going to share a bit of what I've learned from... Can you hear me at the back? Yeah, you can, good. I'm going to share for 5-10 minutes or so some of the experience of working with associations. I heard Daniela mention the UK IR Society. I've worked with other associations as well. And at the end of the day, you will drive your own association and your own course, but I'm hoping that in sharing, we'll be able to learn something from one another. I think it's important as well, coming from a bigger, more mature market, to share some of the trends that our IR practitioners are seeing. And last but not least, I'm hoping we have time to compare and contrast. It was very nice meeting Anna Maria, who, interestingly enough, the IRO from ALRO, is also an IR Society member. And I was saying to her, it's all well and good talking about best practice, but best practice always has to be seen in the context of your own market. You know your environment better than I do, but nevertheless, I'm hoping that by sharing some of the things that we would do in a typical day for an IRO in UK PLC, you'll be able to pick up some ideas yourself. And at the end of the day, I could stand here for as long as the slides allow me to stand and keep talking. But if I'm not making sense, or you feel that you would like to ask something and put it into your own context, I think that's invaluable, and I would encourage you to do that. So please, if you want to pick me up on anything about investor relations, here's your opportunity. I'm sure we'll have plenty of time after my presentation as well. When I think of investor relations, it was quite interesting looking at the logo of Franklin Templeton, because you can see that that is an investor that's been in business for a long, long time, if not more than a century, rather like this wonderful country, Romania. But if you think of the concept of the limited company, that's been in existence for centuries and centuries, probably at least 300 centuries or so. And investor relations, at its simplest, is purely looking at company and investor and the relationship between company and investor. And I heard one of the earlier speakers say, of course, companies need capital, and companies can generate their own cash themselves. We know that. They can also borrow, but they also need, I think, to go to equity markets. And again, being at the stock exchange, I think it's timely to remind ourselves, as the lawyer said, that if you're in public capital markets, you're in very regulated markets. And that's good and bad, and we'll talk about that as I progress through the slides. Just briefly on IR associations, I helped start the Singapore IR Association. Of course, I've worked at the UK IR Society for a number of years. And if you just put it into the context of market development, the first IR association was actually the National IR Institute in North America. That was 1969. 1980 was the IR Society in the UK. I think Japan was the first IR association in Asia. And since that time, of course, many other associations have sprung up. I was at the Middle East IR Association 10th anniversary earlier this year, and I'll be at the Hong Kong IR Association 10th anniversary next month, actually. And it's very, very good to see this initiative in this part of the world. And if you play to your advantages, which you have in your regional markets, given that you're the biggest stock market, there is, I think, many, many opportunities. And the communication between your listed companies and investors, and not just investors in Romania, but as Franklin Templeton showed, investors outside Romania. And while I said best practice has to be put into the context of your own marketplace, the one common element of all the associations is we're trying to encourage our companies to go beyond our national markets to international investors. And you can bet your bottom dollar, I know I keep mentioning our investor, but at the end of the day, if you don't have investors, you don't have investor relations. Obviously, you need the companies as well. But those investors are spoilt by choice. They can come to Romania, they can go to other markets. So while you'll have champions in your own sectors, in your own markets, there will be champions in other markets. So effectively, you're competing for attention every time you think about communicating on behalf of your company. And that's an important point to remember. And the reason you need to bring people together like this to share through an association is because of that very, very reason. So there will be other associations. I'm sure you'll plow your own course and do very well. But the key that I've found is this type of gathering, this type of sharing. And Daniela mentioned forthcoming events. Those are very important. She and you will need to keep getting together and finding ways to share professional development, obviously growing the membership, which has started very, very well. And importantly, bringing in the rest of the marketplace, not just the stock market, but other service providers who can play a role. And it was very, very nice to see the lawyers, other players recognized today, because you need all the professionals. That's how marketplaces work. And I'm hoping your association, like the associations I've worked with, are actually very open, very welcoming of other support. And you will need partners, and of course you will need sponsorship to do the sorts of events, including awards, dinners that Daniela already has in mind. And that's to be applauded. So you know everybody, go out and tell them about this amazing association and raise the profile of ARIR. Interestingly enough, I've put not-for-profit there because I heard not-for-profit in the earlier presentations. And if you look at, for example, the IR Society or indeed some of the other models, we are actually limited companies. So we were set up with the same responsibilities of looking after our members, producing annual reports, being accountable, and making sure that obviously we run a tight ship. But while we say not-for-profit, which is very honourable and the right way to go because there's no conflict of interest, at the end of the day, the success or failure of an association, like any business, is very much driven by the activities and the support from the members. And ideally, while not-for-profit, over time, clearly you need to gain some surpluses to put away for the tougher times when markets aren't so good. So for example, at the IR Society, which has been around for nearly 40 years, we have a pretty strong balance sheet because my predecessors were sensible in how they ran their association. Yes, it's not for profit, but no business can last for nearly 40 years or longer unless you're putting something away from the key events. And I'm sure the big events of 2019 that Daniela mentioned will have in mind not just bringing you together for the right purposes, but also also trying to get something out of it for the association so you can put it away for 2020 and future years. And it's important to think in those terms. And perhaps the most important point is the leadership of the organization. And I don't think in your new president that you've got a finer role model or example of how to bring people together. But obviously we practice what we preach. The governance element is very, very important as well. And I'm sure you'll work out your own structure for that. This is simply an example. This happens to be the UK IR Society. And I think, as I've already mentioned, we are a limited company. I was the only executive director on a board of directors which was made up of volunteers, including a chairman, various other roles from treasury, and so forth to support the organization. And the volunteers are drawn from the membership who also help run committees. So there would be an events committee to do the sorts of activities that Daniela's thinking about. Of course, there would be a finance committee to keep us on the straight and narrow and trying to do the right things, and a variety of other committees from best practice to policy. And in many ways, this is really at the heart of professional organizations, trying to promote what we think is best practice, learning from other organizations and examples, and really then re-sharing that with the membership. And it's important to remember that an association can only survive if there's a dedicated resource for you as members to call into. So I'm hoping that in time there'll be some sort of secretariat, if there already isn't, run through Daniela, and I'm sure some other executive support. In fact, this morning coming in, I saw there were quite a number of people helping set this whole thing up. So I'm sure there's a lot of willing volunteers, if not full-time executives. And as I said, it goes without saying that your calendar of events is key, because it gives you purpose, it gives you reason to get together. And it's opportunities like this that you'll be able to learn from by talking to one another. And I made the point about obviously putting something away for the future and making sure that your association too lasts a long time. Okay, I just thought, since I'm in the UK, I would share with you some of what we're seeing if you're an IR practitioner. And you will have heard the famous known knowns, known unknowns, unknown unknowns. So bear with me for a moment, because I was trying to avoid talking about politics. You'll know that the good old UK is trying to leave the wonderful European Union. And if you look at it from an IR perspective, I was talking to a Romanian businessman on the flight last night, flying from London. And if I think of known knowns, everybody knows that UK PLC is leaving the European Union. And an immediate impact, as he was explaining to me, is on the currency. So if you're dealing in the Romanian currency and pound sterling, inevitably business is having that immediate effect. So from an investor relations point of view, that's fairly obvious. We've all seen the fluctuations in the pound sterling over the last 18 to 24 months. Now, if you think of the known unknowns, everybody knows that dear Theresa May is desperately trying to negotiate the best way for the UK to leave the European Union. But from a business point of view, who have been some of the loudest voices clamoring for clarity, clamoring for some certainty around what the policy means in the UK, obviously that makes life very difficult. And we've had this horrible extended period of uncertainty, and no doubt we'll have further uncertainty. Now, if you think where IR comes into its own, the investor relations role really is there for not just the known knowns, not just the known unknowns, but ultimately the unknown unknowns. And we all know when companies run into trouble, because no plan is perfect, things always go awry. That's when your communications function becomes key. And I'll point out later in the slides just how important that function is. I heard the lawyer talk about, in some ways, if I'm paraphrasing, excuse me if I misunderstood what you were saying. But he made the point about regulated markets and the role of the stock exchange. If you look at the pyramid of companies, you as public traded companies are at the top of the pyramid. You are the most regulated companies there are, not just stock exchange regulations, company law, and other rules and regulations. And I got the impression from the earlier speaker that actually you can overdo regulation. And if you look at the history of European Union, the UK regulatory model, it seems to have gone from regulation to deregulation to regulation, to more regulation, to what some would say, and I think the lawyer was suggesting you don't want to go that way, to over-regulation. I heard MiFID II mentioned in an earlier speech. We all know about the market abuse regulations in the European Union as well. And from an IR practitioner's point of view, while of course rules are important and we recognize that, and we wouldn't be in public capital markets if we didn't want transparency and proper rules and regulations. Sometimes the rules can be overwhelming, and I think the plea to the regulators, the stock exchange, is always try and get the balance right, try and be pragmatic, and nobody gets it right all the time. You tend to lurch, as we have in the UK, from overreaction, post-financial crisis 2008, to, in some ways, regulation after regulation after regulation, and it's confusing, I imagine, when you're trying to run a business. So the balance is very, very important to get right. Inevitably, if you overdo it, inadvertently, without realizing, sometimes you change market structure. And one of the weaknesses of the UK market at the moment is the fallout, not just on the buy side, which is consolidating rapidly and having to take greater responsibility for its fee structures and what value it's giving end investors like individuals, retail investors, but also for the advisors, the sell side, and the support system. So in the UK, we've seen a bit of a decline in the research coverage, certainly a decline in the number of players offering corporate access, that is access for investors to you, the companies, and all sorts of other ancillary services, including research. And companies obviously need research support, research coverage. And I think the smaller you are, the tougher it is. So if you're a big company and you've got lots of research coverage, you don't seem to have been impacted by some of the regulations and some of the changes in market structure. If you're a new company to the stock exchange and a smaller company, I think life gets tougher and tougher. And certainly at the smaller end of the IR Society membership, we're certainly beginning to see that, and we expect that to continue, which is not necessarily where we want to be. So I just make the point again, regulation's great, and I applaud stock exchanges and making sure that everybody's behaving properly. But sometimes, as I feel in the UK, you can overdo it, and you get unintended consequences in the marketplace. I'm going to move on because the next item is just thinking of opportunity. So while there is fallout on the sell side and in terms of the support for companies, there is also opportunity. And whenever you survey investors, whenever you talk about the opportunity to engage directly, particularly given market structural changes and changes in regulation, immediately, of course, use of technology springs to mind. So in the UK, for example, we've started to have our first virtual AGMs. And there's no reason why, if you're going to have such a big event, that you can't be reaching far bigger audiences through technology. So I think in many ways, while I painted perhaps a slightly gloomy picture, there is also opportunity for your roles in investor relations, because you should be resourcing yourselves, and your bosses, who I know are here, having taken all the plaudits and recognition for setting up the association, I'm sure are thinking how to resource your function. Often I hear, oh, well, the trouble with investor relations is it's a cost, isn't it? And there isn't upside. I don't think anything could be further from the truth. Investor relations is an investment in your company, in your investment story. And if you are competing for attention, you better have the best IROs and you better have the best resources. And an obvious way to address that, particularly for smaller companies today, I think is increasing use of technology and increasing use of digital communications. And whenever we look at best practice in the UK, increasingly, one of the key elements is use of digital communications and how that's coming across. Not just annual reports regurgitated through your website, but finding interactive ways to address the audiences that you're trying to address. And audiences are very different. We aren't all Franklin Templeton's big institutional investors. There are individuals like ourselves who are thinking of savings, retirement, and pensions. They too need to be addressed. So the flip side of the downside that I mentioned in the previous slide is opportunity to find ways to reach those investors that you want to reach. And we're often asked about social media. I think, as Daniela said, social media is there to be used and is inevitable. If you can get 70 hits on launching your association, you can bet your bottom dollar for any company there will be social media activity. So I think you have to find ways to use it, participate, and raise your profile, just as the association has done. It's no different for you as listed companies. Find clever ways to use technology to communicate and engage with your audience. They are, after all, if they're shareholders, owners of the company. Just thought I would talk about governance. I know that you have a code of governance. The UK, in many ways, pioneered these codes many, many years ago. Inevitably, we never get it right. So we've just redone the Code of Corporate Governance. And what's interesting in the UK is some of the issues that companies are increasingly facing, and what the revised code, which was released over the summer of this year, tries to address is some of these big issues. You'll know we always have problems with remuneration. Certainly in the UK we did. I read the other day that the highest paid chief executive has just paid herself £265 million. To be fair, she owns half the company, so she obviously gets lots and lots of dividends, but by any measure, £265 million is a lot of money. And perhaps it's not surprising that our media is very much driven by these sorts of sensational headlines and stories. There's always some facts behind the stories, but there is very much an underlying current of us and them. It's okay to be paid enormous amounts, and for the rest, you know, so what? And I think, again, thinking about regulated companies, public companies, I think if you take the public route and you're paying those sorts of salaries, you're bound to get a reaction. We have had reactions over the last few years. So what the Code of Corporate Governance is trying to do is put a bigger onus on remuneration committees to try and match whatever the performance indicators of the company are with the individuals who are taking these big pay packages. But the Code of Corporate Governance is also trying to look beyond just financials and think of broader issues. You'll all know the acronym ESG, so considering environmental, societal, as well as governance factors. And increasingly that's becoming more and more obvious in our principles-based Code of Corporate Governance, and I would expect that to continue. I've already mentioned relationships with the buy side, in that one of the impacts of MiFID II was to make the buy side pricing more transparent. If you start putting the onus on the buy side, they start thinking twice about the other services that they need to get access to companies like you. And as I mentioned, as the buy side consolidates because of cost pressure, inevitably it's using less of other services, perhaps doing more things itself, which it should do, including its own research, rather than relying on the sell side. Perhaps getting more direct access to companies, which is not a bad thing. But as I said, not every company is resourced to have that sort of access from big investors. If you're a smaller company, you're struggling more and more with not just the sell side, but potentially your target investors on the buy side. I've put Investor Forum up here because one of the other key trends in UK PLC, because of disgruntled shareholders, is more and more activism, so more and more merger and acquisition and takeover activity. And because, again, we use our media very liberally in the UK, and sometimes it can get out of hand and companies can become very, very vulnerable very, very quickly. What the Investment Association has done in the UK, which is the counterpart of the IR Society, so the IR Society has mainly companies as its members, although we do have some listed fund managers, but the Investment Association represents all the institutional investors. And what they've come up with is an idea where if a company feels under attack and not understood by its shareholders or prospective investors, there's a more informal route to get behind closed doors, which is a very English, very pragmatic way of dealing with issues. And rather than let the media run riot and take control, work out with your key stakeholders, including your main investors, what are the issues, let's talk about them, and let's not let it get out of hand and suddenly have all these big sensational activist activities. And that's relatively new, but it's very much in keeping with the governance structure and putting an onus on boards of directors as well as institutional investors to think more responsibly about the long term rather than taking the money and running with it, with a view to looking after smaller investors. We've always had issues in UK PLC with the role of proxy advisors. You'll know that prior to AGMs, when the resolutions are being looked at by institutional investors, often third parties are used to do the initial review, the initial analysis and recommendation. And increasingly, UK PLC is pushing back against that because it thinks it takes control out of the hands of the owner, the institutional investor, because they're busy and under-resourced, and gives it to a third party. Well-known names act as proxy solicitors, but it is something that we're acutely aware of because we hear about it a lot from our members. And I mentioned ESG, environment, societal, and governance issues. And increasingly what you're seeing is a more integrated approach to non-financial as well as important financial information. And I think that's a trend that will continue. So if you look at our best practice awards, for example, since Daniela mentioned awards, increasingly our judging panels are expecting to see more and more around ESG factors, more and more integration of both annual report, mainly financial, the CSR, corporate social responsibility, or ESG report, and ideally bringing it together, because at the end of the day, business doesn't work in isolation. Business isn't just about numbers and producing profit. Business is about, of course, behaving responsibly and being accountable to broader stakeholders, including your employees, including your customers, and including everybody else. And certainly in the UK, the government, the regulators are increasingly taking that tack. And again, our code of corporate governance includes a lot more on non-financial matters as far as reporting goes. Well, I think it's useful now turning to IR in practice. And as I said, there isn't a one-size-fits-all, or I don't have all the answers on the slides. And I'd encourage you just to put yourself in the context of your own market. But the very first definition up there talks about context, which I mentioned right at the outset, because investor relations, or the investor relations practitioner, is trying to set the context in which the company operates and relate to the sorts of investors that you want as shareholders. It also talks about fair value, which is an interesting point because we all talk about trading, liquidity, and getting the right share price. And obviously, we're all fascinated by share prices. And I was sharing with Daniela yesterday when I met her. When I worked at the Singapore Exchange, which, like the Bucharest Stock Exchange, listed on its own exchange, the perception when we first went public was of a small, boring, utility-type function that wasn't going anywhere. And it was interesting working with 3 chief executive officers over an 11-year period, which was the time that I spent at the exchange, and seeing how the investment story around the market operator, developed, evolved, and changed. And when we first went public, the share price was $1.10, Singapore dollar 10 cents. The lowest share price within the year or so of the IPO was below the IPO price, 87 cents. And nothing seemed to be happening. And the perception of being small, boring, and not going anywhere fast in a small market very much stuck with us. And then with the second CEO, there was a change in approach, a change in positioning, a change in the resourcing of all the communications functions, not least investor relations. And that was very much the role that I played more or less from the time I started at Exchange to the time that I left. And what was fascinating was not just being part of the story and helping develop the story as a strategic function working with management, but actually seeing the progress we made. And while the share price isn't the be-all and end-all, over time, of course, you'd expect the share price to reflect the value that the market accords to your business. And at its peak, the Singapore Exchange was $17 per share compared to the $1.10 that we'd IPO'd at. Of course, after 2008, the share price fell, but even today, the share price trades between $7 and $8. And it's just a reflection to you of what is possible and how a story over many years can be changed, developed, and then presented through the communications functions, not least investor relations, but obviously for all other stakeholders through the communications functions. And that first definition reminds me a lot of my experience at the Singapore Exchange. But interestingly enough, I said you shouldn't be hung up on share price, certainly not today or tomorrow. Who cares, right? There's so many other factors that drive share prices. You shouldn't get hung up. But unfortunately, when UK PLC did some soul searching post-crisis through what was called the K review that looked into capital markets, they found from surveys with the boards of directors that most directors equated communications, being a public company, with share price, and that was their preoccupation. Clearly, that's wrong. That's not how it works. But I just thought I should include that as a pointer, and we'll talk about it a little more. If you think of other perspectives, a key principle around investor relations is this whole notion of engagement, this whole notion of relationships. That's why it's called investor relations. And Sir John Egan led a task force which was supported by the IR Society, supported by the Investment Association, all the main players. And he concluded with this definition, which is more around stewardship and going back to the basics of company law, which essentially charge the board of directors with responsibility for the success of a company. And I think if you look at it in broader terms, as Sir John Egan did, he's a captain of industry, he ran lots of different UK PLC companies, you begin to put into perspective what investor relations is really like. And for me, actually, that's probably my favorite definition. Now, if you turn to the regulator, the Financial Conduct Authority, they see as their mandate looking after the little investor, looking after individuals like us, and they turn the notion of capital markets and communications with investors into something more to do with retail investors or customers. Obviously, that's very, very important as well. And then last but not least, that's the most famous investor in the world, Warren Buffett, saying that the whole purpose is obviously to attract the shareholders that you don't want to lose. And it reminds me that actually not every investor is necessarily a good fit for your company. So while it's great to have investor relations, you have to work out what your story is, who that actually works for, and then go and target those audiences. Investor relations isn't about talking to everybody and getting everybody on your share register. Certain investors will want certain things, and it's your responsibility as investor relations to work it out with management, for management, and make sure management is put in front of the right investors. And obviously it's your job to hang on to those shareholders as well. Just a reminder, obviously, what IR can't do, and I emphasized clearly it isn't about the share price. It isn't about worrying what happens on the stock exchange every day. The difficulty, of course, with markets is they're dynamic. There are many, many factors at play. You're only one player in a broad spectrum of players. So things happen every day, which is why we're always telling our IROs not to worry about the share price, and you should certainly never be judged on the share price. The share price is an end product, a byproduct that happens after all the hard work you've done and takes care of itself. Clearly, there are too many other market issues, sector issues that you have no control over, so why would you worry about the share price? The irony, of course, is we all think about the share price, and we do worry about the share price, but just put it into perspective. You can't control the share price. You're not allowed to, right? By law, we can't manipulate share prices. Let's be a bit more positive and start to put into context what we actually think we can do. And if you go back to the definitions of investor relations, it's supposed to be very much about reaching out to the right sort of investors for your business, for your investment story. It's about building relationships, not just in good times when you go public for the first time, but also when you have that long journey of taking a few hits, as the Singapore Exchange did. After we went public, we went into an economic downturn. We had a dreadful respiratory syndrome, the severe acute respiratory syndrome. Obviously, there were other factors, 9/11 in 2001. So within a year of going public, share price had obviously gone down, just as every other company had done. But we never lost heart, and with the right thinking, the right inputs, and a very good management team, the communications functions were built up, built out, and over time we were able to actually start expressing what management saw as the investment story. And over time we were able to get to that fair value, which I said is actually between $7 to $8 and is still that to this day. Yes, we did have a bit of a pop, a bit of a spike leading up to October 2007, but we all know what happened in 2008. Inevitably, we all got hit. But I am proud that to this day, how many years, 18, 19 years after going public, if you'd invested in that particular stock, not only would you have got a reasonable return on capital appreciation through the share price, but they pay out fantastic dividends every year. 80% of the net earnings are paid out as dividends. That's pretty impressive. A great story, but you have to put yourselves in the shoes of your management. You have to put yourselves in the mindset of what is our story, what are our strengths, and you have to remember you're competing with the next company. And even if it's not in your sector, in your country, there'll be other sectors in other countries with other great companies as well. So it's incumbent upon you to do the hard work and hard thinking. And I'd hope in Romania that the IR function is very much seen as a strategic function. And the reason it's so invaluable rather than a cost is because of the intelligence gathering. It's your conduit, it's your voice, but it's also your feedback mechanism for the market. And if the IRO is trusted and good enough, they ought to be informing management strategically what's working, what's not working. And management, if it's listening, should be adapting, revising, and if necessary, even changing the investment story so that you do get it right and you do get the right audience to support you. Ultimately, if you do all these things right, you obviously start to get to results. And while obviously the share price is an end result, of course it's something that we all want to work not just for the company, but for the investors as well. And just to emphasize again the whole relationship aspect of investor relations. This is a nice little diagram, and if ever management asks you, and I know there is some very senior management here, what's the value of IR? If you follow that slide, and I hope Daniela can make the slides available afterwards if you find them useful, you see that it's a very iterative process of inputs and outputs. And I expect IR, just as I did when I was lucky enough to be in the role at the Singapore Exchange, to have a voice at the table. You don't necessarily have to be a member of the executive committee I was for a period, and then as the chief executives change, inevitably the roles change, and my role changed a number of times. But because I was there for so long, I also had a voice at the board, so I knew the chairman very well. I worked with 2 chairmen at the Singapore Exchange. And I think it was testimony to the fact that if the exchange couldn't get its investor communications right, how did we expect all the other listed companies to get it right? So in many ways, the most inspiring chief executive I worked with recognized, you're an example. If you do well, it looks good. If you make a mistake, it looks really bad, and you can't make any mistakes. It wasn't that bad, but he did make the very good point that we must be the role model or the example to the other listed companies, so much so that we were able to develop within the exchange services for the issuers from pre-IPO to IPO to post-IPO, including induction courses, professional development training, et cetera, et cetera. And I think it's very important to remind your management that actually you have the ears and eyes of the market. You get fantastic feedback. And while management may be brilliant at running the business and very busy running a great business, sometimes management can be quite blinkered with their head down and working without realizing what's going on around them. And let's face it, whether they're brilliant or not, perceptions are perceptions. The media says what the media wants to say. Investors will make up their own minds, particularly as they have choices. So you need to be finding ways to feed back to management what people are really thinking. And I know sometimes with chief executives who are very strong-willed, very, very good at what they do, sometimes it's quite difficult to get through. But over time, if you become part of that management process, part of the strategic thinking, I think the value in IR is being big enough and brave enough to tell management what other people are thinking. Obviously, you have to find clever ways to tell them. But ultimately, if it's reflected in the investment story and your shareholders who know you see that every time you take management to meet them, I think you can make a big difference. And as I demonstrated, you can certainly make a difference to the value of the business. And investor relations should be seen as an investment in the business and not as a cost. I've actually got some key performance indicators at the end of the slides just to share with you. And I think it's quite instructive because we're often asked, well, how do you measure IR? It's a good question, but I think you can. Just thought I'd share, you probably do the same things, just regular cycles around the planning for investor relations. We all know that as public companies, you have statutory reporting requirements, so it's quite easy to plan 12, 18 months in advance, which is what we used to do. So you know when the results are coming, you know when the annual general meeting is due. You have to do those whether you like to or not. You must do them. But you can find other ways of doing them. I mentioned reaching out to bigger audiences, including retail investors through virtual AGMs, which are relatively new in the UK, but beginning to gain more popularity because of the reach. And there's no excuse in this day and age not to have use of technology, whether through the website, which is a given, but also through other channels, including possibly even for your AGM. And of course, if you plan your calendar in advance with particular shareholders, particular target investors in mind, you can then involve your management when you need your management. If you don't obviously plan ahead, how can you get your chief executive, chief financial officer involved? I know that investor relations can do a lot of the groundwork, can do a lot of the day in, day out stuff, taking telephone calls, taking inquiries. But when you have the set pieces around the reporting calendar, you need to have planned, you need to have prepared, and management needs to be available to support you. So just some examples there. This is typically what happens for UK PLC. First thing in the morning, the results will go out, and then this sort of type of activity happens where you'll be doing various briefings from the media to the analysts to your biggest shareholders, and then deciding whether you do more with non-shareholders, prospective investors, including the activities on the previous slide, even going out on the road, for example. And ultimately, the whole aim is to keep everybody calm, keep everybody on track. And you know, if you've done your job well,
generally there shouldn't be any surprises, should there? There's a lot of debate in the UK whether you should be guiding markets, perhaps over-guiding markets, and we all know that you can't because inevitably something happens. But I think it depends on your business, it depends on how you view the business, how you measure the business, and how easy it is to give guidance. So clearly some companies do give guidance if it's more clear what they do, when they're doing it, and how that's actually seen. In the case of the Singapore Exchange, we couldn't give guidance because nobody knew from one day to the next what the trading would be. We also argued we were the most transparent business. You could see the trading stats every day for equities, derivatives, commodities. We would never give guidance on whether we thought the market would go up, down, sideways, or on the volumes or values that we would trade. However, over time, we could see clear patterns, and we might give parameters compared to other markets to give some color, and that was very much an investor relations role. IR became the go-to for exchanges because we were one of the first exchanges to go public in 2000. Only Australia and Hong Kong were before us, and then after us were many, many exchanges, including, of course, your very own Bucharest Stock Exchange. But the point there was you have to decide what you're comfortable doing, what sort of visibility you have. And the only visibility in the exchange that we had was on how much we would spend every year on CapEx, because in many ways an exchange is an infrastructure business. All the trading systems, all the settlement systems. I heard central counterparty systems mentioned in an earlier talk. So it's very much infrastructure. So we would tell the market we will spend X in the next 12 months, and then we would spend X in the next 12 months. That was the only guidance we gave. But ultimately, whatever your business is, you're trying to manage expectations. You're obviously trying to manage a variety of audiences, from difficult audiences who don't really want anything but a story, the media, but let's be fair to the media, who I understand are here today as well. We all need the media because we all need to get the story out, and we all need profile. But there are other testing audiences, from the buy side to the sell side. And just to remind ourselves, the key roles, looking at the audiences on the sell side and buy side. I don't think I'll say any more on that because I've already covered most of that slide. But hopefully these are just useful pointers. And then going back to Warren Buffett's point about the shareholders you never want to lose, and the point I emphasized about not every investor is suitable for your business. And the role of the investor relations team is to work out what the story is with management and what type of investors will like that story. And then there are many, many ways of finding the right investors you never want to lose. There's all sorts of databases, there's third parties, there's the sell side, and of course, if you do your own peer analysis, you can see what similar companies are doing, who's investing in them, and think, well, maybe they should be investing in us. But to me, at the heart of a good investor relations program is this whole idea of the share register. You own the share register, you're responsible for building it out, you're responsible for developing it, and if management can't see the value in that, I'd be very, very surprised, if not disappointed. And ultimately, as I said, management will know if you're getting the right type of investor when you put them in front of the investor. So I had a very difficult chief executive officer, very particular about anything and everything, quite rightly, because he was a busy man. And the worst thing for me was if I took him into a meeting and there was a surprise, because he felt, your job to put people in front of me, your job to know the person, your job to know what questions they're going to ask me, and your job to make sure I leave the meeting feeling that was worthwhile. If it's a waste of my time as chief executive, you're not doing your job. So quite testing, but I hope you get the message. I won't dwell on this because we're not here to tell you who the best investors are or who the best shareholders are. But I do know, having worked in other developing emerging markets, that obviously market structure is an important factor here. And I heard from one of the speakers before about size of free float obviously that can be a constraint, but I think turn it on its head, think of your strengths and advantages as a marketplace. You're one of, if not the biggest market in this particular part of Europe. You're doing great initiatives like launching today's IR Association. And if the companies get behind it, share their practices and learn off one another, I'm sure your IR activities, your share registers will begin to build out. And I keep mentioning Franklin Templeton because they're here. They wouldn't be here, obviously, if there weren't great investment opportunities in the Romanian market. And I'm sure you'll continue to develop. Just going back to my point about, well, how do you measure investor relations? And what I liked about my company, where I was for 11 years, was investor relations. In fact, all the communications functions were seen as part of the office of the CEO. So the reporting line was very direct. And that's because we had just gone public. That's because we had struggled for the first 2 or 3 years. We changed management. And the new CEO thought, if I'm to make a difference, I want all the key strategic functions reporting to me, being my mouthpieces, informing me and making sure the story is right. So all our KPIs were actually aligned to what he was thinking in terms of the overall business. And importantly, I mentioned financials are obviously key. We all get that. But at the same time, there are other ways of qualitative measures that you can look at as far as IR and indeed the business is concerned. And I like to think that CEO was very far thinking, very forward thinking in incentivizing the IR team that he did. And just to share with you, these were the Singapore Exchange KPIs. So on the left-hand side, you had the corporate KPIs, which are, of course, very much around the type of business that we ran, a very capital-intensive business, given it was an infrastructure business with some good old measures there. And then for the IR team itself, top of the list, we were in charge of the share register, meaning we should know who the largest, best shareholders were personally. In fact, when we changed CEO for the third time, the first thing the new CEO said to me was, right, could I have the top 30 shareholders' names with telephone numbers, and can you start setting up calls for me? Now, if I'd say, well, I haven't got a clue who they are, obviously I wouldn't have been doing a very good job. I could, in all honesty, set up the calls with the top 30 shareholders. In fact, I could have done it for probably the top 100, no problem at all. But interestingly enough, the register, while predominantly institutional, also had a very significant retail element, because when we went public, Singapore Inc., which still owns a large part of the Singapore Exchange because it's seen as a national asset and a strategic asset in the financial services sector, offered a lot of the shares to the public to encourage equity culture, participation in equity markets. So actually we ended up with something like 50 to 60,000 individual retail investors. And one of the CEOs said to me, it's my job to be responsible for the share register, including all the individuals. And I had to think of ways that we could try and engage and address them. And as you saw on the earlier slides, one obvious way is to think of open days or days in which you invite the public, so our retail investors, to show what you do. Now, as I'm sure at the Bucharest Stock Exchange, everything's electronic, so there's not much to see, but we did have a very nice IPO gong and very nice auditorium so that people could come in and see what it was like to ring the, or bang the gong. In Singapore they have a gong. And we also showed them different aspects of the Singapore Exchange. And the whole point wasn't necessarily worrying about how many shares each individual had. It was more educational, it was more about outreach, and it was more about being, I think, responsible to all shareholders regardless of size. Now, it's not easy to do, and we only did that annually, but it worked for us. And importantly, the CEOs I worked with were all very, very paranoid about perception and how they were seen in the marketplace. So we used to do an annual perception study, which was done by a third party. We would share the key shareholders, key analysts, other influencers with the third party. They would organize calls, we having pre-advised, you will be called by so-and-so because they want to ask you some questions about the business, strategic direction, the CEO, the management, the communications, investor relations, head of investor relations, very detailed. And then we would get back a 200-page verbatim report on everything said. And then we would distill it, present it to board and management, and they took it very seriously. And one of the key measures for me personally for each of the CEOs was credibility. And if we went into a meeting and there was any embarrassment or anything that suggested I wasn't doing a good job, they would count that as a mark against me. If obviously the relationships were very strong, I could organize meetings, organize great discussions that informed management's thinking, particularly the CEO. Obviously, I was held in better regard. And when I look at the best IROs I've come across, whether in Asia, whether in the UK, the best ones have decided relatively earlier than other people like myself who fell into IR by accident, having been a banker before, and I was involved at the IPO, because they recognized what part they could play in the communications role. Some of them had finance backgrounds, some of them had strategy backgrounds, but all of them were consummate communicators in terms of relationship building, getting to know people, understanding people, and being able to present back to people what the people wanted to hear. I'm not talking about just managing your boss. I'm talking about big shareholders, big new investors, and their intelligence network is built on their relationships. So the relationships with the sell side, who obviously help companies get access to the buy side, the relationships with the buy side through shareholders and investors. But there's an example for you. I'm often asked, what about when you get a new IRO? Well, keep it simple. How about giving them responsibility for a relationship with one analyst? How about giving them responsibility for organizing meetings, X number of meetings? And slowly but surely, they build up their repertoire and their ability. And if you trust them, you give them more to do. And it is nice to win awards. People always say, I don't care about the best practice awards. Well, then why do 600 people turn up every year to the Tower of London to celebrate the IR Society Best Practice Awards? Because they want to see who's on the shortlist and they want to see who wins. And of course, if and when they win, they're so happy. And they're happy because it's recognition from their peers, but it's also something tangible to be able to show management, we are best for this year, right? And you can never take that away. And I think our management thought that was important as well. I've put share price question mark. I put share price because nobody is not interested in the share price. Everybody's interested in the share price. But it should be a long-term reflection of all your efforts. You should never be judged on an annual basis on whether the share price is this or that. That's just crazy. And to conclude the presentation, these are, in sum, what the IR Society thinks IR is all about. So it goes without saying, if you don't have commitment of your management team, and I would say the board of directors, who certainly from a non-executive point of view, with responsibility for the success of the company, according to company law in the UK, ought to be interested in who the owners of the company are, the shareholders, ought to be interested in what the owners are thinking, ought to be interested in preparing for the AGM when they meet shareholders or representatives of the shareholders. So to get commitment from the top is obviously essential. And IR is definitely not a cost base. IR is an integral part of your business's strategic thinking and promoting and communicating that thinking through the investment story. And if you get the best IROs, I assure you, you'll get the best results. And I'm not just talking about an appreciating share price. Now, consistency is being brave because no matter how good the CEO, no matter how good the team, no matter how good the plans, depending on the business, depending on other factors, things sometimes go wrong. But you've got to be big enough, brave enough, trust your relationships to be able to put them right, share with them, look, didn't quite work out as we planned. Don't worry about it. It's a short-term issue, fixed, sorted. And the best example, although it wasn't a short-term issue, was BP, which is a very supportive member of the ARIR Society. And they did us the courtesy and honor of presenting a case study of their dreadful disaster in the Gulf of Mexico of 2010. And it was one of the best case studies around consistency, relationships, and being brave. While they didn't have answers, nobody did for some time, the communications channels are all kept open around the clock because it's a global business. So whether you're in the West or in the East, you could talk to the investor relations team. And if it was only to hear something like, look, that is being looked at the moment, I can't tell you any more, as you know. However, when we next report, just to keep holding people's hands, keep them on side, and continue the relationship. And with their share price collapse after that disaster in 2010, there was a fear, certainly in the company, that they would be taken over because the share price was falling dramatically. And what stopped the share price drop was a core holding of 25% of the share register, which was UK fund managers who believed in the story, believed that it was possible to resurrect BP, and over time that's exactly what happened. But the key lesson was keeping the channels open, even if you can't or haven't got anything to say. Be human. People want to talk to someone, and sometimes with a disaster that big, it is round the clock. They said they've never worked so hard, never been so exhausted, but they proved it. So today, of course, BP is back more or less where it was, paying its dividends again, and is still BP. It's an amazing story. And I think it goes without saying that if your management isn't clear about what they're doing, isn't clear about the purpose of the business, isn't clear about what's in it for stakeholders, including investors, whether through dividend policy, whether through any other measure, then people will move on, investors will move on to another company that is clearer. I've already talked about credibility. That's you good people. Credibility with your management, credibility internally to get all the information you need, judgment to use the information, and credibility externally with all your audiences, whether analysts, buy side, sell side, and indeed the media. And ultimately, the best communication isn't about one-way story. Here it is. Here's what I've got to say. Here's my deck of slides. Take it or leave it. It's about what you're actually seeing and hearing. It's about reading your audiences and making sure that you take back what you think is really important to inform management and make sure that the story continues to develop, continues to evolve, and continues to be front of mind for your investors and not someone else's investors. But as we all know, as the famous Irish playwright George Bernard Shaw said, the greatest problem, of course, is the illusion that I've done it, right? Investor relations, communications, it never ends. It's continuous, which is why it needs to be properly resourced, a dedicated function, and supported by your management. With that, not having given you any chance to stop me or ask any questions, I hope, Daniela, that we have enough time if there are any questions, or indeed later in the proceedings. But I shall stop there.